I mean, we've made some changes in our forecast for the US economy already. We do think a Trump sweep, which is our baseline now, will be inflationary for the US. We think it could add as much as 0.8 percentage points to our baseline inflation forecast for next year. So inflation could be stuck at around 3% next year. And one implication from that is we think the Fed will be cutting rates less than we previously thought. We had 100 basis points of cuts for next year. We've trimmed that back to only one cut now in March of 25.
For 2025, you've gone from 4 cuts to just 1.
That's right.
But nearer term, we're agreed that in less than 24 hours, they are going to ease 25 basis points at the upcoming FOMC. In December, another 25?
We think so. So we have 2 more cuts this year.
Yeah.
We think monetary policy right now is still quite tight, and they are making progress on inflation, on getting it down now. So Trump's only starts his term in January, and we'll start to see what he actually does. We do think he will follow through quite hard on the tariffs in the first half of next year. We feel so.
Yeah.
Yeah. So that's a big reason why we do think inflation will be higher in the US next year.
Yeah. Yeah. At what stage are markets going to get their head around this risk or this worry? Because so far the Trump trade is, yay, deregulation, right? Yay, tax cuts, risk off. There's no fear out there, right? When are they going to get their head around the fact that, look, Trump's fiscal plans are considerably more aggressive than Harris's, right? It's going to have to mean, the deficit goes higher. The debt obviously balloons as well. Yields are going to go higher. Treasury is going to have to just start throwing issuance out there, right? And we've got an inflation problem and a higher cost of money, higher cost of funding problem as well. When does that start to bite?
Well, I mean, for the US, if you're thinking about growth, Martin, growth may not weaken that much.
Could actually accelerate, you think?
We think it will be roughly where we have it before the whole election started. So not much effect on our baseline on growth, because
even with deregulation in place on the horizon for financials, even with deregulation in sight for energy, pump baby pump, and growth still stays where it is? So
they're supportive, but the tariffs are a big tax on consumers, and that's a big factor. And the tax cuts, so the tax extensions is not really a fiscal stimulus. That's avoiding a fiscal cliff, because they're cuts that are in place now, right?
Just extending them.
They're avoiding a fiscal cliff by extending them. So we'll see. It's not so clear how much Trump will be able to do, even with a clean sweep, in terms of tax cuts, given the fiscal situation as it is quite dire already.
Yeah.
So we think, balancing the deregulation measures and some stimulus against the tariffs and the tightening up of immigration kind of balances itself out. But I would say the biggest negative from all this is going to be on the impact overseas. And I'd say particularly export-orientated economies